Overall, you've got 19%, food 21, rent 22, energy whopping 33%.
With prices rising, major chains are looking at how to keep customers.
The president touting that the U.S. beat inflation and saying there will be a so-called soft landing.
Labor strikes, inflation. What does this mean for our crypto portfolios? The inflation numbers are out. Is this good or bad for crypto? How should you prepare for what the inflation is doing to our portfolios? I'm Joshua Jake, and today we're going beyond the headlines.
The U.S. could see a massive disruption at East Coast ports in October as dock workers are threatening to strike if contract demands aren't met in 60 days.
Yeah, that is not good. American port strike looms as shipping's next major choke point. This is over 45,000 dock workers that are threatening to, of course, close down and go on strike if their demands aren't met on October 1st. Now, I took notes so you don't have to, but the duration of the strike would account for 6 weeks. And what that would do to our markets is absolutely destructive. Ports affected, major East Coast and Gulf Coast ports, 40% of United States imports. Goods affected, electronics, automotive parts, consumer goods, and retail products. Supply chain delay, 10 to 20 days. This would have an estimated price increase for your electronics by 8%, automotive 10%, consumer goods 7%, and retail products by 6%. And potentially increase the CPI number by 0.4% over just 1 quarter. So where do we stand?
These workers' significant role in keeping goods flowing is leverage for the union, but the Maritime Alliance says its renewed contract is a giving one, saying it has made several offers since we first began substantive contract discussions in 2022. Our latest proposal would provide industry-leading wage increases, boost employer retirement contributions, offer new employees higher starting wages, raise employer contributions to local benefits, and continue to provide premier health care coverage.
That sounds amazing. That is what every worker would dream of, right? Well, according to the workers, yes, the individuals in the middle class, they have a different story.
ILA released a statement in response. When it comes to the master contract negotiations, let me be frank, we are very far apart, particularly on the economic issues. In fact, we're at an impasse. The propaganda coming from the United States Maritime Alliance is just that, propaganda, likely the work of a PR firm trying to spin the situation in their favor.
Now, the odds of a strike are going to be very, very slim. But what is about to happen and what I expect is about a week before this even takes place, as the negotiations get closer to October 1st, less than a month away from elections, this is where the White House will probably step in with a victory swing and allow us to be saved from, of course, the strike. This would be really good both for a presidential campaign and, of course, be dominant in terms of polling numbers for the middle class. But worst case scenario, this actually happens and this destroys inflation, because the inflation numbers, I have news for you, were not as good as everybody likes to make them out to be. I'm about to show you a clip of Joe Biden for like one of the first times at the White House speaking about soft landings. Now, this is a term every crypto bro has been excited for, as they hope it will pump their Bitcoin bags to $100,000. So will we get 100K Bitcoin this cycle? I will give you guys my thoughts at the end of this video. Now, before we get to the next clip, guys, if you do not have an Arculus wallet, you are at risk of losing all of your crypto, especially if markets collapse. If the labor strike were to happen, inflation were to come back, interest rates were to rise, it would decimate the price action in Bitcoin short term, and that can have a negative impact, not necessarily on Bitcoin as an asset, but of course, the exchanges and the price. That could mean you will lose that crypto forever. So get your crypto off exchanges, get an Arculus wallet today. And now back to the video.
President Biden dropping by an economic event for social media creators and influencers after getting more good news on inflation this morning. The president touting that the U.S. beat inflation and saying there will be a so-called soft landing. Mr. Biden also joking he's looking for a job.
That's why I invited you to the White House, because I'm looking for a job.
Yeah, so are about to be the workers planning to go on strike, of course, in America's largest port, 6 out of the top 10 ports in the United States. Why, might you ask? Well, it comes down to true inflation, real inflation. You see, while Biden is out here touting about all the economic prosperity that's happening in the United States, the reality of the situation is that it's a much darker place for middle class and average day Americans than it is the 1%. And this is what I believe is going to impact not only your Bitcoin portfolio, but as well as prevent us from having an altcoin season.
So the White House is saying we are now under 3% for the first time since 2021. When you hear that as a headline, is that good news for the Biden-Harris team?
It's good news for the American people that things are moving the right direction. It's not good news for the Biden-Harris team. If you take and cherry pick just the last 3 months of 2024 or the last 6 months, you can get some good numbers. But if you look at the entirety of the record, 43 months as president and vice president, you've got an average inflation rate of 5.4%. No one's wages have gone up that fast. So for 43 months, people have been going to work, working hard, and falling further behind. They know it. They keep being told by the administration, you don't understand, this is the greatest economy, but they know what they're experiencing. They're working hard and falling behind.
I think this list, frankly, could be a lot larger than what we're showing here. But overall, you've got 19%, food 21%, rent 22%, energy whopping 33%.
33%. I know it's hard for you guys to believe this, but Fox News is actually using real data. And I can confirm that from the Federal Reserve, the New York Fed themselves. If you haven't read, their medium-term inflation expectations decline. Short and long-term inflation expectations unchanged. Article or press release here from August 12th, 2024. Oh, you are about to be let down. What does the 2.9% mean for your everyday households? Well, if we go down to household finance, the median expected growth in household income was unchanged. Okay, the median income in your average household was unchanged at 3% in July. This series has been moving in a narrow band between 2.9 and 3.3% since January 2023. This is the problem right here, guys. This is what's going to stop us from potentially having an alt season. I'm going to explain right now. Median household spending growth expectations fell by 0.2% points to 4.9%, the measure's lowest reading since April 2021. Perceptions of credit access compared to a year ago deteriorated in July, with the share of households reporting it is harder to obtain credit than 1 year ago increasing. However, expectations for future credit availability improved in July, with the share of respondents expecting it will be harder to obtain credit in a year ahead decreasing. The average perceived probability of missing a minimum debt payment over the next 3 months increased by 1% point to 13.3%. That is disgusting. The highest measure reading since April of 2020. The increase was most pronounced for those with an annual income below $50,000 and those with a high school degree or less education. Again, the lower or poverty class here. The median expectation regarding a year ahead change in taxes at income level declined by 0.3. Hold on. Let me read. Your income, your wage growth in the United States isn't moving as fast with inflation. So despite inflation coming down, your Joe Biden could, of course, tout how there is so much economic prosperity, but the reality is everyday Americans are saving less and less, and they're spending more and more, while wages are not keeping up with inflation, and that is going to impact consumers in our markets. And the problem with this is what's leading up to what some people like Kathy Wood believe to be a huge deflationary moment in the United States economy for the first time since the Great Depression in the 1930s. Now, I do not believe this is necessarily right around the corner, but what I do want to point out is that Americans under previous administrations had way more money available to them, way more in their savings accounts, and that is simply because the cost of goods and services was way cheaper. Despite the media, despite everybody propagating and spreading these falsehoods, which is that wow, the economy is stronger than ever. The middle class is stronger than ever. We are struggling to save more and more money, and that is forcing us to take on more and more debt, to use more and more credit, which leads to an immense bubble in our economy. Don't believe me? Well, let's zoom out just a little bit to none other than 2007. Remember when the last time we were at these rates, these personal savings rates, was between 2005 and 2008, leading up, of course, to the financial bubble, the real estate collapse in our markets. Now, again, we could see a rise. We could see this turn over simply by drilling more and creating more energy in the United States, fixing these supply chains. And I do not believe this American port is going to be shutting down. I would imagine it is dumb. It would be ridiculous I wouldn't doubt Kamala Harris would be not the smartest to take advantage of this, but I know her team is very smart. She's very intelligent. She's going to use this to her advantage. I'd imagine they're going to step in with really strong negotiations that favor the White House from a political perspective, showing that they are here for the middle class. That could help with polling leading into the elections. How does this wrap back into our portfolios? You have everything happening in the Middle East. You now have monkeypox. Yes, monkeypox. The World Health Organization declaring a monkeypox outbreak with a global health crisis again right before elections. It's nothing to necessarily be scared of. It's just something we need to be aware of in our markets. The retail focus attributes, the retail volume is almost non-existent. It's getting harder to obtain credit. It's getting harder to, of course, allocate and purchase and continue this spending by consuming more debt. Everything is getting harder for middle-class Americans and that lower income level. So can we get growth out of this? Well, really, the only way I see us getting out of this is, of course, by lowering those energy costs, going back to Trump-era policies. And I know you guys hate me bringing politics into this, but this leads us into the crypto portfolio. This leads us into also your stock portfolio. Gold is hitting all-time highs. The reason is because everybody is betting on the downfall of the US dollar right now. And when you pull up the charts, I have to be this guy with you. I'm not going to sit here and lie to you guys like it's going to go up and to the right forever. Yes, inflation is positive for Bitcoin's price action, but Bitcoin is not a store of value at this point. It's still an immature asset class. And even though we're talking specifically about Bitcoin, I know 80% of you probably watching this are allocated majority to altcoins. And altcoins could absolutely be decimated and continue to bleed up until we see a reversal in that savings rate. We see money being easier to borrow in our economy, not just from a corporation level, but also from a retail level. And we see that inflation come back into, disinflate in our economy, and those personal savings start to rise. So there is so many macro headaches at this point. The best thing I'm doing for my portfolio to position myself is simply buying Bitcoin and blue chip altcoins that I believe will be taking huge turns in, of course, this upcoming bull run. That is Ethereum for tokenization with Ondo. That is going to be Chainlink. I think artificial intelligence is something everybody should be looking to dollar cost average back into as we get a pullback in that market and see earnings reports more than likely shift to the positive side for Q1 of 2025. There is opportunity out there. However, the markets are going to be extremely volatile as they are uncertain because these elections, guys, it is 50-50. Harris has just as strong as a chance at winning this election as Trump right now. And we won't know more until the debate on September 10th. So she's going to keep taking more and more of a lead. So separating politics out of this, you can quite clearly see with the Federal Reserve, with the strikes that are looming, with, of course, the global health crisis and even Iran and all the tensions in the Middle East. Businesses, as shown in the original clip in the intro of this video, are struggling because their profits are depreciating as consumers spend less and less capital. And that means, guys, they're not going to be dollar cost averaging or buying into, of course, risk on assets. I do believe Bitcoin will go to 100K one day. I just simply believe it might take a little longer than everybody expects, and you need to prepare yourself.